All right, welcome back, everyone. I'm going to get right into the stock market technical analysis. We're going to look at the tech sector, some of these Fang stocks, because, again, big earnings, those large cap tech stocks are, for the most part, what's been carrying the market mostly this entire year. And then also, they just reported their earnings. That's all out of the way. The Fed's out of the way. The market's free to ultimately pick a direction on where we want to go. So we want to look at that. We'll take a look at wheat. It's kind of interesting at the current level, and we'll just keep the video relatively short. Just get right to the point. So as I go along, guys, if you've been with me for a while, please drop me a thumbs up on the video. It does help the channel grow. Additionally, if you're new or if you haven't taken the stock market technical analysis course, I put that together, multiple videos, kind of string it all together with a checklist. And it's essentially there. It's not a get-rich-quick day trading course. It's a stock market technical analysis course. So it's a course to teach you a little bit more technical analysis skill set and what to see in the charts. So if you're interested, link in the description below. Finally, the private member group. There hasn't been a whole lot going on in the private member group in the last few days because in general, there hasn't been anything going on in the market. We've just been kind of floating around sideways doing nothing. So again, I'll continue to post additional trade ideas as they show up. Sometimes I don't have trade ideas. Sometimes we just have to wait for the market to really show itself and those trade ideas to set up. So again, private member group, link in the description below on that one. $5 a month. So in general, pretty affordable. Let's get into it. Nasdaq futures. So we'll go down to the daily chart. Let me kind of clean the chart up. Okay, so we've been in this big sideways range basically right here for over a month. It's almost going on 6 weeks now. And there's really no change on the daily chart. The daily chart continues to have that negative divergence on both the RSI and the PPO. And it continues to, every little pop higher gets sold into. And it continues to diverge, telling me that we're likely going to break trend. The larger picture, this is your bear market rally. And again, we're treating this as a bear market rally until proven otherwise. This is your support here, this upward trend line. So a break of that should set the Nasdaq up for the next leg lower in the bear market. If I roll down to the hourly chart here, you'll see here on the hourly top of the range is, basically right there. You can see we hit it about 13,346, and you can see resistance, multiple tags. They each get sold into. And that is it really for the most part. Each of these rallies on the hourly, if you look, you'll notice that each little pop higher on the hourly chart has been divergent high. So just yesterday, they kind of popped it up right there. That's a divergent high. There's your negative divergence. So they just keep getting sold into. And at this point, we should head back down to the bottom of the range. Now, there is this upward channel I've got going on now, where we basically have some support. We have enough reactions to verify that. There's another one. So we'll watch that now. So I think we're likely heading down to that area. And then from there, we'll see. A break of that should set us up for that move lower. Otherwise, we could continue within this range for another week, or maybe there's no indication on when this range is going to die or break. It is pretty long in the tooth, I think, and on the daily chart, you do have that negative divergence that's been building, so it should come soon, but there's no real indication that, it's going to be this week or next week. There's no way to tell, so we'll continue to look for, a break of this range. We'll do a quick little scan of the Fang stocks. Amazon, again, just, Amazon's kind of moving a little higher, grinding higher. Nothing that's, too amazing. I can see Amazon maybe popping up. It depends, a little more time goes on, and then if it pops up, it could hit this downtrend line right here, marked in blue, and still keep this candle right here. This candle is critical because that is a island reversal candle. You look to kind of hold that candle. You don't want to see price action really trading above that range. Really anything above 113.06 on a daily close negates that candle as a reversal candle. So far, that candle has held as the top. You sold down, they rallied it up, and it's still holding as the top. So a little bit more time, and you could rally into this downtrend line. And this downtrend line is significant because that's your bear market trend line in Amazon on the daily chart, okay? So a little more time and maybe it wants to do that. It could rally into that downtrend line, major resistance, and still keep this candle as the top. So that's maybe what's going to happen. But in general, not much going on. Google, again, not much going on. They popped it up today, made a new high. That was a divergent high, and it's getting sold into. So again, these divergent highs have a high probability of being sold into, and there's no guarantees, but there's a very good likelihood that the algos pick up on it, traders pick up on it, they sell into those divergent highs, and that's what we got. So you can see, negative divergence here, popped up, made a new high, they're selling into it. So nothing really going on Google. It's just it's moving higher, it's diverging, but not really impulsively. Let's look at Apple. This is kind of the more critical one because Apple's so heavily weighted in the broad market. On the daily, I've got this bearish rising wedge pattern. It's pretty much at the apex, but again, they kept it within that pattern into earnings. And you can see they broke it down right here 1 day before earnings. That occurred right before earnings, so it was very, very suspect. Not a breakdown you usually want to take. And then here earnings came out, they popped it up, and that's really been the end of where this thing's gone. It's actually been selling off after earnings a little bit. We're back down within this wedge, so we're close enough that this bearish rising wedge pattern is still intact. It's still a pretty clean wedge. We have negative divergence on both momentum indicators, and I'm looking for that breakdown. So again, looking for the breakdown. Earnings is out of the way. We should be able to start to roll over and head lower. Meta, this one, negative divergence on the daily chart, bearish rising wedge pattern. Broke it to the upside after earnings, and sure enough, back down within the wedge. So very similar setup to Apple. This wedge pattern is still intact, and I think that we're likely going to start to break down. The first level of support would be gap fill on this one, which is about 214-ish, we'll call it. That would be our first profit target on anything that you shorted after earnings. So if you shorted here after earnings, first profit target would be right there on that gap fill. And Microsoft, again, the pump, the euphoria, it came on earnings. So that basically pumped, they gapped it up after earnings. But again, they sold it down ahead of earnings. So the earnings report made it look probably a lot better than it really was. Because if you had held Microsoft before it sold down, before earnings, then after earnings, it was up about 1%. So that's not that, amazing. But if you saw the headline after earnings where they closed it way down here, it gapped up, it was up 7% right after that earnings. So it makes it feel like, oh, earnings is amazing and everything's great. Yeah, it sold down right ahead of there. So it really was only up in general about 1%. Now, yes, it's up a little bit more from there, but just treading water. And it's really at resistance. If I roll out and it shows cleanly on the weekly, this trend line is significant. You can see here on the weekly chart, support, roll it in here. There's a bunch of trend lines. There's your sell signal on the weekly. And we've been back testing for a couple weeks now. About 3 weeks, basically, we've been back testing. So if I roll down to the daily again, you'll see here that there's the back test, just holding at that resistance, not really able to move much higher. Yeah, grinding higher, ticking higher, little by little, but in general, not impulsively able to really take off. And so, yeah, this is resistance. This is where the sellers should be at. I'm expecting downside to show up when the markets decide to break down. And that's what I'm anticipating. Triple Qs. So triple Qs is, we've got to go down to the hourly to kind of see this one. Just kind of trading within. It keeps kind of making little new highs, divergent highs. But each new high is, you can see, negative divergence. There it is right there. The most recent high yesterday was a divergent high. We now have a bearish PPO crossover on the hourly chart, signaling more downside. So I think it's very likely we're heading down to this trend line, this upward trend line right here, somewhere in the 318-ish. And until that breaks, that's the upward trend that I can see. So we'll watch that. We'll watch the Nasdaq futures. We'll watch some of these Fang stocks to give us an idea of where things are going. And yeah, that's all those Fangs. Let's look at wheat. Here's the wheat futures. Now, wheat futures, again, wheat, bigger picture on the daily chart. bullish falling wedge. So this is a bullish setup, all right? Came to the apex. Now we undercut the wedge just briefly, but that's been recovered. So that was a false breakdown bear trap. And now today we're pulling back to the bottom of that wedge, which is support. So this to me looks like the zone of support. We should hold here and then continue to move higher from here. So and I do anticipate we move higher, especially because we had that false breakdown. So it's good support. We should continue to bounce off this level. And semiconductors, we'll just cover the broad index. Here is the upward trend line right there. All right, semis were in an upward trend line. Towards the top of that trend, they started to build negative divergence, and that trend broke. Okay, and so it's sell the rip again. This is a downtrend. It's the beginning of a downtrend, at least from my analysis. You roll down, you hit support, you bounce. Again, it's sell the rip. There's the rip, gets sold into. There's the rip, getting sold into. Again, I think this will continue lower, and we should continue to trend down. And if the semis continue to trend down, it's most likely triple Qs is going to be going lower as well. So that's really all I have for today. There's not a lot of technical change over the last couple days, and especially there's just not a lot going on. We're just kind of grinding around, waiting for that move, waiting for some sort of a catalyst, I guess. But in general, the charts are set up. At least tech is set up bearish. All right, and I believe it will resolve to the downside. And that's the way we're positioned. So I'm going to wrap up. Drop me a thumbs up, guys. Check out that course if you haven't done so. Catch you on the next one. Bye.